Welcome to another edition of Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Of course, Cattle Call is being brought to you by Wolf Auto, small town strong. Well, he's got some optimism in the markets, but we're kind of double clutching it maybe a little bit in the trade today. For those that know what double clutching means with an old farm truck, Brad Koima joins us. He is with Koima Varlick, based out of Sioux Center, Iowa. And let's kind of talk about, the market had some good feels to it, but you said it might be just kind of hitting the clutch a little bit, Brad.
Well, perhaps. I feel like, first of all, thanks for having me on, Susan. Favorite program for me. And so maybe I got to pull the rewind button just a couple of days here. Okay, so I was gone last week, missed the snowstorm. Had numerous friends and customers offer to pay for an extended stay while I was gone, because we went up basically every day that I was gone last week. Ironically, I came back to work about noon on Friday to watch the market pull off that great big reversal down after that, So we've got a technical reversal in place here where we made a new high, characteristic of cattle, and then just, top the day the news is the best. I'm not saying we topped, but that's some of the chatter you'll hear then, 215 cash, and then all of a sudden, what do you do for an encore? And the guys start to take profit, and they'll go sell a few, and you look up and you're 200 points lower. Well, we have not gone back to erase that, and in fact, we had quite a bit of follow through the following day on Monday. So you got a kind of a nasty looking chart, a nervous looking chart. So anybody that's ever looked at a chart has to be thinking and worrying about the same thing. So, that's kind of the premise of the thing. Are the fundamentals different? Do we have more cattle suddenly this Wednesday than we did last Wednesday? Of course not. It's just that the market is the market. And anybody that's been around this thing a while knows that sometimes you get these markets that don't necessarily have to explain themselves to every nuance that's in the fundamental deal. So with that reversal in place, I wonder if maybe, to push the clutch, to pause a little bit, very overbought. I mean, guys, remember, we just rallied at $14, $15 or something like that on some of these months. Could we have a bit of a pause for the cause? I would say yes. On top of that, with open interest is a whole nother topic that maybe we can hit, but don't forget we're coming up on month end and quarter end. And sometimes that's a time where you'll maybe see some of the funds evening up and saying, hey, I think I'll take a little money. They get paid based on their performance. So there is some incentive for them sometimes to take money. So there's just a couple of things out there that make me, think maybe the market, everybody doesn't like me if I'm not really bullish. Okay. So whatever, I it's not that I'm super bearish. I'm not. I just wonder if maybe for a minute here, we've got to pump the brakes just a little bit.
And you got to do that once in a while just to kind of rejuvenate and kind of locate what you're doing. Having said that, though, we know there's not enough cattle out there. We know that there's been a discount, as you talked about, to the futures, but it just seems like the market has a feel like these cattle are just going to appear out of nowhere.
Well, yeah, good luck. I was really happy with the makeup of how the market went last week too. I mean, the north was 215, the south was 210. Finally, the north back, clearly in control. Two things: lack of supply. As goes Iowa, so goes the market. Every market begins and ends. I've said it 100 times on your program. People can laugh at me if you're from Nebraska, but I appreciate it if you're from Nebraska, because I'd call, north of I-80 anyway, northeast Nebraska, a very similar cash trading area, who negotiate for the cattle. And now we're in between crops of cattle largely. Okay. The yearlings are largely cleaned up a little quicker than normal, I think, because of great prices and great weather. Not so much last week's program, I guess, but pretty good weather where these cattle performance was really good. And now we're going to say, well, okay, when are we going to start to get calves fat? Well, not on the end of March. And largely it's difficult to get them even fat, no matter how big you feed them, even into the month of April. So, or how big you get them when you buy them. But it's going to be very, very tight here in the north for a while here, in my opinion, and we should get a premium. So it'll be interesting to see. I still think what your comment is that the cash market certainly is a dominant influence, and that influence is not negative.
Going to be Friday before we see any cash, and is it going to be on the lower side?
Debbie Downer, I think it's going to be a little lower.
Okay.
Doesn't have to be for me, but there's been just a little leakage here in the north at 213, not much, but just a little bit. So that'd be 1 to 2 lower than the extreme highs of last week at the end of the week anyway. There's been just a little trickle at 208 in Kansas when they were 210 last week. So the bulk of the trade, I'm not going to say that that's going to be the trade, but I just, thinking like a feeder, and I am one, how do you say no to 213? Within $1 or so of the highest price ever in the history of ever, and cattle that make lots of money at that. I just feel like that. And then on top of that, then the next week's sequence is that it's April, and whenever you have a contract month, there's always more captive cattle. That's just the way it is. There's more contracts and not that there's an unusual amount. There's slightly more contracts this April than there was last year, but actually a little bit below what the 5-year average is. But if I was a packer, I think I would try to use all those contracts up the first 10 days or 2 weeks of April so that he can try to get some leverage so he doesn't have to chase out there again, right? So I don't know. That's part of the other explanation. First, the technical part, and now the fundamental side of the thing, why I thought maybe there's a couple, 3 weeks where maybe we chop just a little bit here and dig in a little bit.
But these box beef, they're on fire once again. What's going on?
I wish it would slow down a little bit, to be honest with you. $10 since yesterday morning. And I forget what it is, 18 or something like that from 4 days ago. I always get a little worried when they jab it that high, that quick. I guess if I was that end user, if I was that consumer, that wholesaler, whatever, I'd kind of go like, you kidding me? I got to pay $20 more than last week for this box. We'll see. I think I hope I mentioned it because I'm almost certain I did a month ago or so when we were talking about when are these boxes going to rally, and I said, yeah, after the cash rallies, then magically, coincidentally, then the boxes will go up. How about that? Yeah. Wait. Anyway, so there's some of that going on. I worry that when you escalate the price that quick, you're going to get a little bit of pushback from the retailer. We'll see. We're not trading box beef anyway. Good luck with that because we're still going to have a tight supply of cattle here moving forward.
Well, I think the higher powers that be heard you and heard a lot of other folks in this cattle industry complaining when we lost that July report. And it's pretty exciting to have this July report back, and it's going to give you the foundation for moving through the second half of the year.
Nice for you to say. I doubt that I had much to do with it, although I certainly made as much noise as I could if they would stand to listen. But I'm very, very happy that they've decided to reinstate the July inventory cattle and feed report. It's about transparency to me. It's about information. And it was like I think I shared with you. It was not an expensive report, and so I'm happy that come July, all of our ranchers and our producers can take another look and see where we're at on the spectrum of, are we starting to retain heifers, or what are we doing here, and where are we at in the overall expansion phase, if it's happening on the whole cattle cycle. It'll be interesting. I tell you what, west of you, Susan, it is dry now. I talked to a couple of different people that talking about whether they're going to turn cattle out, even grass cattle here this spring. So I hope that this weather pattern breaks for their sake and your sake, and that they get enough moisture here to be able to run those calves out on pasture. So we'll see. Well, that'll be another thing we'll be watching here the next few weeks, I'm sure.
Oh, definitely. Well, thanks, Brad, for joining us. What's the best way for folks to get a hold of you?
Well, we still have a phone here, 712-722-0023, or you can sure look us up on kkbtrading.com.
All right. And this is going to be my last cattle call as I move on to a new entity talking agricultural markets and news, but it doesn't mean the show won't continue. We appreciate everybody. And I know I personally appreciate all of you that have taken the time to watch this and listen to the podcast as well. And of course, thank you to Brad, because this show would not be what it is without Brad Koima joining me every single week. So thank you, Brad. And thank you to everybody there in the office who puts up with them having to be quiet while you and I talk.
I sincerely appreciate it. And I sincerely appreciate your work, Susan. You're very professional. You're one of the best. You ask great questions. And clearly you deeply care about providing this sort of information to your people. So wish you the best.
Thank you so much. This week's edition of Cattle Call is being brought to you by Wolf Auto, small town strong. And as always, a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the edition of the Cattle Call on the Rural Radio Network.